Yeah. Hello, YouTube. Everybody's.
All right, we're streaming live.
All right.
Let's do it.
Now, that email is. All right, we're in. Okay.
Just dreaming about it, you've got to put in the right work, and with the right partner by your side, achieving what you set out to achieve, it can be. Stanbic IBTC, a member of Standard Bank Group.
Business trends beyond the headlines.
We had a substantial amount of capital available to invest.
Business Express on Smooth 98.1 in association with Stanbic IBTC. Stanbic IBTC. It can be.
Ready? Studio. Very good morning to you and welcome back. This is Smooth Breakfast right here in Smooth, the 98.1. Love music, love life. It's time for Business Express. And of course, Roches joins me live via Zoom. Roches, good morning to you.
Good morning, Judith. Good morning to all our listeners. Great to be with you all. And good morning to our special guest.
Yes, good morning to our special guest. Remember that Business Express is proudly brought to you by Stanbic IBTC. And we do have a special guest joining us live today. It's IOT Daudu. IOT, good morning.
Hi, good morning. Thanks for having me.
Thank you. Join the conversation as always. You can send us a WhatsApp message to 0809-444-0981. Again, 0809-444-0981. You can also head on to YouTube and catch the action live on there. We're streaming live on YouTube at Smooth 981 on YouTube.
All right. And if you have any inquiries or questions, send an email to callme@stanbicibtc.com. Right? That's callme@stanbicibtc.com. IODG is an oil and gas research analyst. So that's what we're focusing on today is oil and gas. IODG, the ongoing intra-Africa trade fair in South Africa, there was some headlines made by the NNPC, the Nigeria State Oil Company. So around the news that they had signed a $1 billion deal with the Afrexim Bank. Benedict Orama, of course, a Nigerian, runs the Afrexim Bank. Can you help us understand what that $1 billion deal is about?
Okay, thank you. So the $1 billion deal is really what you call a forward sale agreement, right? So the NNPC is basically borrowing on its production, about $1 billion, and it will pay back over an unspecified period of time using oil production. So that will be about 35,000 barrels per day will be sold and used to pay back the facility from the African Import-Export Bank. The $1 billion will be used by the NNPC for explorational activities, for searching and trying to discover more oil and gas reserves to boost what we currently have, which is about 37 billion barrels of oil. And I believe about 200 trillion scopes of gas.
Okay, so is it correct to say the Afrexim Bank is essentially funding further oil exploration?
Yes. That would be the best way to put it, in exchange for barrels. Okay,
what about existing IOCs, oil and international oil companies in Nigeria? Couldn't this deal have been struck with them? Doesn't the same deal exist already with the crude swaps and so on?
So the crude swaps are slightly different. The crude swaps are the swap of raw crude oil for refined petroleum products. That's for PMS diesel and AGO. So that's a different type of transaction. There is a similar existing transaction which was entered into last year, July, with a few oil trading companies. I think Qatar was one of them, where the NNPC entered into a forward sale agreement for about another $1 billion as well. In terms of IOCs participating in this transaction, I mean, I think they are focusing more, from what we understand, on monetizing existing reserves, given what we're seeing in terms of the global energy transition. So they are not necessarily boosting explorational activities, but trying to monetize the reserves that they have existing as quickly as possible, given the uncertainties we have with oil and gas prices and demand in the future.
Great stuff. Great stuff. The deal was being hailed as the biggest the biggest deal at the Intra-Africa trade fair. Is it worth the hype? Is $1 billion? Is there any sizable impact there?
I wouldn't say the $1 billion would have a significant impact on the Nigerian economy per se. In terms of the oil and gas sector in particular, I mean, again, $1 billion, when you look at what the production levels is like for Nigeria, again, I don't think there will be a significant amount of time. It would take a significant amount of time for the NNPC to pay that back. It would depend on the oil price level as well, and stability in production. But I think maybe in 2 to 3 years, that would be paid back. So I don't believe it's a significant amount of money that will transform the oil and gas sector or Nigerian economy per se. I guess what you could then probably look at is what they discover as a result of the $1 billion, which would, I guess, support what you could probably look at in terms of return on proceeds or the use of proceeds. If nothing is discovered, then really you could argue that the funds were not utilized in the best manner, although there was no need to borrow the amount of money. If it comes out and we find a significant amount of reserves, then it will be held and praised even further.
Okay, great stuff. Now, in the wake of COP26, all the talk of climate change, that COP26 was in Glasgow. There was an African Energy Week in I think it was Cape Town last week, and now we've got this Intra-African Fair in Durban. The African countries are saying that they will continue to explore for fossil fuels. Is their position understandable?
So I would think so. I mean, and you would have to look at the numbers, right? So in terms of the African continent and its contribution to greenhouse gas emissions, it's probably less than 5%, if I remember correctly, which means that, I mean, Africa is not a significant contributor to greenhouse emissions and the climate impact. The second point you'd have to argue is that, Africa is still very far behind in terms of industrialization, particularly sub-Saharan Africa, excluding South Africa. And one of the key resources that it needs to generate revenues to boost its basic capacity on things like power and infrastructure is its natural resources, which includes oil and gas, coal in some areas as well. So it still needs to rely on some of these fossil fuels to generate revenues to boost its industrialization ambitions, as well as economic growth and activity. So I think that's the position that a lot of African countries are positioning themselves in. And you can argue that it's a viable position. Because, I mean, if there's a sudden transition away from fossil fuels and demand drops, you're looking at the inequality gap widening even further as well. So it's a bit of a sticky point, but I think Africa will still probably rely on fossil fuels. It may be a case of we start transitioning towards gas, which is a cleaner alternative to coal and oil, and then probably later on in the future, maybe transition even further into renewables as well. But I think in the meantime, there's still going to be a heavy reliance on fossil fuels.
Thanks for mentioning renewables. So how realistic is the transition for Africa, to renewable energy without job losses and other consequences?
So I think Africa's transition will be different from a lot of the more developed economies. I think Africa's transition will probably focus on gas initially before it then probably looks to renewables. I think, for Africa, it still needs to monetize a lot of the resources it has. That is probably going to be focused in the near term. You then have to look at things like power generation and access to clean cooking fuels as well, such as LPG. to really boost power generation and supply, as well as supply of clean cooking fuels. That again could be reliant on gas as well. So I think the transition will initially be on gas before we start to look at renewables. I think for another supporting factor is that gas power plants as well are relatively less expensive to construct compared to renewables, although renewables are cheaper to run to generate power. But from a gas perspective, the power plants are said to be cheaper to construct, which is another supporting factor. So I think the fact that there's still the need to monetize gas resources, there's a demand for power generation, with gas being a key source, as well as clean cooking fuels as well. I think that will continue to support the need for gas in the medium term before we start to see a transition to renewables. And also, I mean, just add on renewables as well, there's still some challenges regarding the reliability of renewable energy. So if you look at hydropower, for example, it relies heavily on rainfall, which has been heavily impacted by climate change. So if you look at countries like Zambia and Zimbabwe, in recent years, they've suffered from power fluctuations in terms of generation as a result of the fluctuations we've seen in rainfall that affected hydropower. So again, I think gas will continue to be a base for us to then start to look at renewable energy.
Well, we have messages here, by the way. Let's quickly take this. This one is from Ogene Ochuku, but you can send your questions to 089-444-0981 pertaining to the questions the topic we're discussing today. And if you have any other inquiries or questions, you can also send them to callme@stambicibtc.com. You can email at callme@stambicibtc.com. This is Ogene Ochuku, and he goes, what is the issues hindering the setting up of modular refinery in the oil and gas industry? That's from Ogene Ochuku.
Okay, in terms of refineries, I mean, there have been some licenses that have been approved. Constructions are taking place, but I think one of the key risks for investors is the regulatory side of things relating to the downstream sector. One of the biggest refined products in terms of volume is petroleum motor spirit, which continues to be heavily regulated, subsidized, which for an investor, you want to be in control of the price of your product rather than being dictated to from the regulator. So I think that's a concern for them, the profitability of such a venture. The refineries that are currently on stream at the moment tend to focus on diesel, so you don't really hear too much about them, but there is a growing interest in the refinery sector, especially now that we've seen the Petroleum Industry Act being passed into law as well, which points to a full deregulation of the downstream sector.
And more questions here. This is Benito, and he goes, hi, Smooth FM. Afrixim should have given the $1 billion to Energy 2.0 plus renewable energy company for solar production in Nigeria rather than to Chop Life NNPC. That's his observation there.
I wanted to ask you about Seplat. What's going on with the leadership change that was announced at the company?
Okay, so the same chairman recently announced he will be stepping down from the board of directors at the next AGM. You could argue this could be linked to recent headlines in the news regarding the chairman and his interest in a few related party companies. That's Sheba Exploration and Production, a company that's been in the news recently due to a loan it had from Zenith Bank that it appears it's had difficulty servicing. I think the loan goes back as far as 2014 and 2019 as well, where the chairman again was in the headlines regarding a loan it had coincidentally from the African, from a few African banks as well. And I think the headlines have really cast doubt on the corporate governance surrounding the company as a result of that. There was also the Axis Bank case as well, which has been resolved recently. But again, that was linked to the chairman as well, related to another related party company, which was Cardinal drilling and servicing. And I think maybe there may have been some pressure from the board for his resignation, just to remove the cloud of doubt surrounding the chairman and the corporate governance issues that have been lingering for the last few years.
All right, great stuff. But how would you describe 2021 for oil and gas companies in Nigeria?
So I think it's been two things. It's been challenging on the production side, given that, again, there is an OPEC quota in place. That's one thing. The other thing is that even with that quota, there's been challenges in terms of boosting production and trying to meet up with that OPEC production quota, because there's been several incidents of sabotage, pipeline leakages, and shut-ins that have really hindered production. At the moment, I believe we're probably producing about 200,000 barrels per day less than the OPEC quota. So on the production side, I would say it's been challenging. On the price side, I think it's probably been a positive for them. A lot of us probably haven't imagined that oil prices would have been as high as they have at the moment. So I would say it's been positive on the price side, but challenging on the production side.
Excellent stuff. IOT Oil, oil and research analyst in the oil and gas space for Stanbic IBTC. Really appreciate the conversation. Very, very informative. And for our viewers, our listeners, viewers, call me at Stanbic IBTC if you've got any questions. Thank you so much, IOT.
Thank you.
Thank you guys for joining us today. And this brings us to the very end of Business Express, brought to you by Stanbic IBTC. Stick around. Coming up at 7:30 is going to be time for Freshly Pressed 981. Don't go anywhere.
Beyond the headlines.
All right, thank you.
Business
Thanks very much. Have a good day.
98.1.